Semiconductors run the world. Think about it. Without chips, what would work? There would be no technology. There'll be no TVs, no cell phones. And so probably the most important company in the world is Taiwan Semiconductor Manufacturer, because they are producing the chips that run everything. They are so ahead in terms of their chip technology than any other company in the world that the world is reliant on Taiwan Semiconductor. Think about it. Nvidia outsources its chips to Taiwan Semiconductor. And without Nvidia, there'll be no GPUs, no Chat GPT, no Google Bard, etc., etc., etc. So before we look at the analysis, let's look at this article because they just did something, as the article states, groundbreaking. So Taiwan Semiconductor Manufacturing Company is the world's leading chip foundry, has started generating revenue from its pioneering 3 nano chips. Despite a challenging market environment, the new chips feature a denser transistor configuration, having significantly improved power and efficiency, marking a major technological leap that aligns with advancements by tech giants Nvidia, Apple, Broadcom. TSMC operates on a contract basis, serving these tech giants in a fiercely competitive smartphone, GPU, and automotive sectors. Introduction of these advanced 3 nanometer chips with high transistor density has begun to positively impact the company's revenue. Now, despite facing a downturn in Q3 revenue due to surplus inventory leading to reduced demand in 2023, signs of a rebound are emerging. A resurgence in PC and smartphone demand is setting a positive tone for 2024 and could potentially drive growth for TSMC. In terms of the stock performance, TSMC shares are trading at lower price to earnings ratio, 15 trailing, 18 forward, compared to the S&P 500 higher benchmark. This financial positioning, coupled with the deployment of its premium price 3 nanometer chip technology, positions TSMC as an attractive investment proposition for those seeking both growth and value. All right, that was a handful. So let's go back to the charts and let's do some updating. There's a reason why the price stopped down here at $60 during the October lows. Well, it was previous highs that was established in January of 2020. There was a reason why price stopped at 110 in July of this past year. Well, look at this major support level that was established in 2021. However, if you can see the monthly chart, you are in an uptrend. Higher high, high low, higher high. Question is, what is price going to do? Is it going to reverse and move higher and break the 110 level? Or will it retest the daily bias level at $81? Now, for the month that's going to end today, you are going to end with an inverted hammer candle. All right, so that's bearish. Going to the weekly chart. If I extend this downtrend line, typically when you break and close above a downtrend line, typically you retest. That retest would align with the daily bias level at $81. So we're going to look at that on a daily level, but you can see how price had this gap up, price came back and then shot up higher. Now these rejection wicks are very bearish and serves as headwinds for price if and when price continues to move higher. Scroll down to the daily chart. Let's look at that level. Now, whenever you see a gap, assume those are extended range candles, meaning the bodies are longer than the wicks. So this is how it will look. So you would have a rally in price, basing candles, rally out, takes out the pivot highs to the left, and rightfully so. When price comes back, price moves higher. And look at the volume on that gap, definitely above the average, which aided to this being an A setup. Now one can say, can't quite see it, but that was daily sellers. Which worked out nicely as price was respecting this downtrend line. And that was good for 3-to-1 reward to risk ratio in anticipation of price getting to the daily buys level of $81. But overall, now what you can see is price is range bound. And so typically when price is range bound, ideally you want to play the extremes. You have an imbalance between sellers and buyers up at 96, imbalance between sellers and buyers down at 81. In the middle, you have a balance between buyers and sellers. So what did price do when it got up to the bottom of this zone? Pulled away because the sellers are controlling this level. Now I would anticipate the same thing on the downside. If price trickles down, look for the buyers to defend the 82-80 range. Now, I do anticipate price moving down because price is below the 200-day moving average, which is serving as a secular dynamic resistance line. However, going into 2024 could be a very bright year for Taiwan Semiconductor. Thanks for watching. Subscribe. Please like the video.